Canada's mining sector is welcoming this week's federal budget as a strong signal of renewed commitment to resource growth and critical minerals. Ottawa is pledging billions for new investment funds, faster project development, and expanded tax credit, while signaling an intention to remove the proposed oil and gas emissions cap. The Mining Association of Canada says the plan could usher in a new era for mining investment and competitiveness. Well, joining me now is Pierre Gratton, CEO of the Mining Association of Canada. Pierre, thanks very much indeed for taking the time and talking to me.
Thanks for having me.
You've described this budget as a turning point. What stands out most for you, Pierre, in terms of real change for the mining sector?
Well, there's so many elements. This was an interesting budget to review. It was a long list of commitments that were positive for the mining sector. Some long-awaited amendments to some existing tax credits for polymetallic deposits like that we have in Canada. So the copper industry has been waiting for. That's in there. An expansion of the tax credits to include other critical minerals is also welcome. But then there's a range of other programs that were announced for infrastructure. For example, the First and Last Mile Fund, which the current government had in their election platform in the spring. That's really an infrastructure-related project to help I think tilt investment decisions in the company's favor. There's also an Arctic infrastructure fund that's going to be led by Transport Canada. They're doubling down on the critical minerals infrastructure fund that's led by Natural Resources Canada. A sovereign wealth fund where they're looking to build on what we saw last week at the G7 around stockpiling and investing in critical mineral companies, etc.
So I hear that, Pierre, but billions are being promised, as you say, through new funds and tax incentives. But the question really is, how confident are you that these commitments will indeed translate quickly enough into tangible support for projects on the ground? Because that's what your industry players want.
Well, a key question right now is we do have a minority parliament, minority government. And so they have to get this budget passed. So that's the big question of the week. Will it, in fact, be passed, or will we be heading into an election? But if it's passed, some of the measures take effect very quickly. The tax measures take effect immediately, and companies can count on those. The program elements, the funds for infrastructure and so on, they have to be set up. We've certainly the infrastructure fund that NRCan has been running. It took 2 to 3 years to operationalize. The good news is it is up and running, and what this government has signaled is more money's coming in. It should be fairly turnkey for that particular program, but for some of the others, there's always sort of a bit of a lag time before the departments are up and running, and we've pressed the government. They got to move faster when it comes to implementation and deployment of these funds.
Pierre, the budget signals an intention to remove a proposed emissions cap. And I mean, it's an intention for now, right? Do you see this as a genuine policy shift towards supporting resource expansion, or perhaps just a temporary easing of pressure on the sector?
Yeah, well, this is for the oil sands mining sector, or the oil sands sector in general. And I think they had signaled beforehand that this was likely to come about, and really it's sort of tied to the carbon sequestration initiatives of the oil sands companies. If they move forward with that, what the budget's saying is there will be no need for this cap, and so it's I think a welcome signal from the government that it is moving off, or prepared to move off a policy of the previous government that was very unpopular and that was discouraging investment into the oil sands industry.
Now, albeit we've had these measures, and you did say there's a list of them which look promising, right? But on the ground, again, permitting delays and regulatory uncertainty continue to challenge mining and energy projects. Did this budget do enough to address those long-standing hurdles?
Well, they've provided funding for the Major Projects Office, which they set up a couple of months ago, which is designed to help move the system forward faster. We've also started to see from different permitting agencies at the federal level some real effort since the Carney government came into office to improve timelines, whether it's the Impact Assessment Agency or if Transport Canada, the various federal permitting agencies that we deal with. So we are starting to see some progress, and the question is, will we see more, and will it accelerate? But we're encouraged so far by sort of a changing culture, a changing attitude that we're encountering within federal departments to recognizing the challenge that we face. We're in the middle of a trade war with the United States. We're also being hit by China. Canada's in a somewhat precarious position, and we have to build our economy on our own terms. And I think this budget is trying to do that. And I think many federal departments understand the imperative.
Yeah. And finally, as I let you go, Pierre, you've called this a new era for mining. What one action would you like to see next from government to make sure that promise, becomes reality?
Well, there were still some things that we would have liked to have seen in this budget on the tax side. And we would still like to see some movement on the permitting side. The project list for impact assessment that the federal government runs. I mean, we've argued for a long time that brownfield sites, mine expansions should be excluded. You are looking at an area that's already been reviewed and assessed and permitted. So we don't think that requires a full federal assessment. Things like that would, I think, send another positive signal. We are also looking to have additional costs included as eligible under the tax credit that they've put in place for mining, to include development costs for underground mines. That's not there in this budget, but maybe next year. We're going to continue to obviously advocate for some further improvements and refinements to the tax measures we saw today. But it's hard to complain too much because there's an awful lot there. And now it's kind of up to us. Hopefully our members and the industry generally will look at Canada differently and start to put some more money in the ground.
Yeah, and just to prey on that point for a second, because it really is about business confidence, right? Business sentiment when you get around. That's what you're speaking to here, isn't it?
Yeah, absolutely. And certainly I hear from our members, the signals that Prime Minister Carney is sending, and his Minister of Natural Resources, who was a colleague of his at Goldman Sachs many years ago, those two, Tim Hodgson, are really giving, I think, they're talking to the industry in ways they understand, that they can relate to. And I think that in and of itself is being really well received and starting a process of building investor confidence. But, it doesn't happen overnight, but I think we're on the right track. And I think many feel that way.
Pierre Gratton, CEO of Mining Association of Canada. It's been a pleasure speaking to you. Thanks for your time.
Thank you.